Uncertainty about how long the war in Iran could last is forcing traders to turn to history for a markets guide, specifically to look at Russia's invasion of Ukraine in 2022 and the playbook on how that affected gas and oil prices, bonds and stocks, and the dollar. First, gas and oil prices. Just like back in 2022, energy prices are the most impacted. Higher energy prices could trigger inflation and hurt economic growth, and that would be bad news for both stocks and bonds. Then we look at the dollar. All the fear and uncertainty means investors are rushing to the safety of the dollar. Just like back in 2022, the dollar rose sharply after Russia invaded Ukraine, and now again, it has risen sharply after the US and Israel attacked Iran. JP Morgan also drew parallels to 2022 and reminded its clients that retail investors avoided selling stocks for a month after the Russian invasion, but then offloaded both equities and bonds. So the biggest market reactions may still be ahead. Goldman Sachs chairman David Solomon said it will take weeks to understand more about the situation, but that market reaction so far has been benign.
But I don't think people are being complacent. I think that market participants are looking and trying to say, how is this going to play out? What's the end game?
So how much history will repeat itself is still unclear. But what is clear, though, is that markets are still on edge, and the main concern is that an extended Middle East conflict will trigger an inflation shock that ripples across the world.